Have you been thinking about buying a home and don't know where to start? It can seem super overwhelming. So today is going to be a great episode for you. We're going to break it down to the 5 most important things to start with when you're looking for a home. I'm Andrea West. I've been a realtor since 2010 and I'm a Bay Area native. This is living in the San Francisco Bay Area. Thanks for joining me. Whether you're looking to move in 9 days or 90 days, I would love to hear from you. My contact information is below. I also have a QR code in my banner if you want to book a meeting with me. You can always give me a call, shoot me a text, or send me an email. Let's get going to the first 5 things you should do when you're looking to buy a home. I know a lot of people, when they think about buying a home, the first thing they do is they get really excited and they hop online to one of those online search platforms and they start looking at beautiful homes in gorgeous neighborhoods and getting really excited. I'm going to ask you to just put the brakes on for 1 second. That's probably not the first thing you should do. The first thing you should do is meet with the lender and get pre-approved. No one likes to deal with finances. No one wants to do the extra paperwork. I know, trust me, I've bought a few homes in my life. Doing all that paperwork, not really my idea of a good time, but in the long run, it is going to pay off for itself 10 times over. Because you know what? When you aren't pre-approved, when you don't know how much you can actually afford to buy, and you don't understand how much your payments are going to be, you don't understand all the costs associated with monthly payments, and then how you're getting pre-approved. A lot of times I get clients who start looking at something and then they find out they can't even afford it. Or they start looking at something and they can afford it, but they don't realize how high the payments would actually be. Just because you get approved for something doesn't mean that you actually want to make those payments that high. So meeting with a lender is invaluable. What a lender is going to do, a lot of people sometimes feel a little overwhelmed and they feel like they don't want to get into all the nitty gritty up front. It feels very invasive. Meeting with a great lender doesn't necessarily have to feel invasive. It can just mean that it's somebody that you can ask questions to, talk to, and yes, of course, discuss finances, send over the proper paperwork, and then get your ball rolling. It's really important to work with somebody that you trust here and somebody that knows the local market. I myself have got some excellent lenders in the Bay Area that I'm always happy to refer my clients to. Please feel free to reach out to me so I can send you my list of preferred lenders if you're interested. You can definitely also ask your own agent if you already have a realtor. They usually will have some really great lenders who will take good care of you. The most important things to think about when you're getting a loan in the loan process and getting some of the most important things for you when you're getting pre-approved is how much can you afford? How much is it going to cost you on a monthly basis? What's the interest rate? And what are the other terms? So a lender is going to walk you through all of that. What's going to determine a lot of these things is your personal profile. So let's take, for example, first and foremost, how much money you make. So if somebody is making, let's just use round numbers, $10,000 a month, generally speaking, the lender is going to say, if you make $10,000 a month in gross, then you can have somewhere between about 47 to 51% of your take-home money going to your monthly living expenses. And when they say monthly living expenses, that means your mortgage, the mortgage interest, property taxes, and the insurance. So it's not just the mortgage. They're looking at taxes and insurance. Now, if you buy a condo, for example, it also means the HOA dues or any other monthly fees. If there's like an extra parking fee or any other fees that would go into that are part of your monthly payments for that property, then that would go into it. It does not count things like utility bills or any other upkeep and maintenance on the property. Those are separate. That being said, so if you make $10,000 a month, using that round number, they're saying up to $5,000 a month on monthly bills. However, if you have things like credit card debt that you have monthly payments for, or car payments, you're paying off a car, or you have a lease, or you have any other sort of monthly payments, maybe alimony or child support, or some other sort of payment that you are obligated to paying, that is going to tally against that $5,000 a month. So keep that in mind if you have any of those additional payments. Sometimes paying things off like a credit card or a car payment will actually put you in a better position for the mortgage. You could afford a bigger mortgage, which means you can afford a bigger home because you don't have these other payments that are dwindling down the $5,000 a month that you can afford. Now, again, it goes back to, okay, it might be $5,000 a month that you're qualified for. Do you want to spend $5,000 a month on a mortgage? Different story. But it's good to know where your starting point is. And it's good to know, okay, for $5,000 a month, that means I can afford this much home. One more fun thing is I get a lot of first-time home buyers that are always asking me, can I put little or no money down? Absolutely. You can definitely put little or no money down. There are some great programs out there for that. But the thing to remember is less money down means more money borrowed. And if you have more money borrowed, that means your monthly payments are going to be higher. So in the end, if you have less money to put down, it actually means you're probably able to purchase a home for a lower purchase price rather than one for a higher purchase price, because now your monthly payments are going to be higher because you're putting less money down toward the home. So just something to think about when you're weighing the options. I don't want that to discourage you, because you can definitely still get a great home with little or no money down, just depending on what you're looking for. Another thing the lender is going to talk to you about is your credit score. A credit score can impact both the lending ability and your potential interest rate, so the attractiveness of the loan. So if you have a great credit score, you're over 750 or maybe even closer to 800, you're going to get one of the best interest rates that there is available. Plus, you're going to be able to possibly negotiate some really good terms up front. However, if you have a lower credit score, maybe something around 650 to 680, the interest rate might be a little bit higher to offset that, which will impact overall how much you can qualify for. If you have a higher interest rate, that means your payments are higher for the same amount of money you're borrowing. So now, instead of maybe being able to afford a $500,000 mortgage, you're only going to be able to afford a $450,000 or $400,000 loan, because you have a lower credit score and a higher interest rate that is going to offset the payments. Because at the end of the day, you're still stuck at that $5,000 or whatever your monthly payment is based on your income. Once you get pre-approved with your lender, that pre-approval generally lasts somewhere between 30 to 90 days. One thing I like to tell people when you're shopping around for a lender, once you get one pre-approval, they're going to pull your credit score. Once that credit score is pulled, you have a 45-day window in California to shop around as many lenders as you would like and get as many pre-approvals as you would like, and it's not going to impact your credit a second time. The one-time pull is good for 45 days, so you might as well shop around. I always recommend to buyers talk to at least 2 to 3 lenders, if not 3 to 5. It just depends on your bandwidth. Make a nice little file in your computer, have everything ready to go, so when you talk to the lenders, you know what to send them. What are you going to send them? You might ask me. Well, first thing you're going to send them is some sort of proof of your income. So depending on how you are employed, if you have a contract, if you're hourly, if you are a salaried employee, if you're an independent contractor, a small business owner, depends. It might be 2 years of tax returns if you own your own business like myself. If you're employed by a company and you get a paycheck every 2 weeks, you're going to submit a couple of pay stubs to them. If you have a new offer of employment with a new job, that might be a really great. So if you have a new employment letter, you have a new job starting, that might be a really great way to say, hey, this is what I'm going to be making at my new job. Here's my new letter. And they can often qualify you based on that. In addition to that, they're going to be looking at other financial statements. So your savings, your checking, any money markets, retirements, investment accounts, just to show that you are lendable. They're going to want to see this for a few reasons. 1, to show your proof of your down payment that you have it, and 2, to show that you do have some reserves. Lenders often want to see reserves when they're giving you a loan, to show, hey, yes, I have a few months of payments in a bank account that I can't access in the unfortunate event that maybe I've lost a job or something has changed and now I need to access that money. So once you have that pre-approval letter, that is really going to help guide you and launch your home search. So now that you have that pre-approval letter, we're going to head into the second thing you should do. You should find an amazing realtor to work with. And I do suggest working with a realtor earlier on in the process rather than going a little bit longer. You can definitely do your window shopping. You're welcome to go to open houses. That might be a great way to meet a realtor, but I would suggest getting serious and meeting a realtor early on in the first couple weeks of your home search for a few reasons. They can really help streamline the search process for you. Meeting with a realtor shows that you're serious. It's a commitment to yourself and somebody else that this is what you're doing. And by doing that, it sets the tone for your entire search because it's somebody that's helping guide you throughout the process rather than you just passively window shopping. Passively window shopping shopping is great if you're not serious about buying. But if you are serious about buying, working with a realtor early on, starting in the first couple weeks of your home search, is going to offer you so much value. It is going to really help your entire home search. It's going to speed things up. It's going to help you focus on what you really want and hone in on what you can afford, what you can get for what you can afford, and where you want to be living. Realtors often have a lot of extra insight into their local markets that they can give you about how much things are listing for versus how much they're actually selling for. There might be other things to know about that particular geographic location. There are certain areas that have environmental impacts that you may want to think about. You might be on an earthquake fault line or in a flood zone or a fire zone, or maybe your soil is more clay than soil. There's a lot of different things to consider, and having a realtor help guide you early on can really help you trim down where you're looking based on what your needs are. You may find out that, hey, I love the Oakland Hills, I love the Berkeley Hills, but guess what? Your realtor is going to tell you, hey, that's a fire zone, and your fire insurance alone is going to cost you $8,000 to $10,000 a year on top of your regular homeowner's insurance policy and the cost of living in the hills, because there's other costs associated with that, things you may not have known before living in the hills. That may guide you so that you can say, oh, hey, well, now instead of buying a $2 million house in the hills, I can really afford a $1.8 million house in the hills. And that'll change. Or maybe you say, I don't want the hills at all. I don't want to deal with any of that. This is just one example of how sometimes a realtor can help guide your home search when you didn't even know it needed a little bit of tailoring early on. So the realtor is going to help you from A to Z, from your home search process through the entire home purchase process until you get the keys and you are a new home owner. So definitely take advantage early on, because the time that you're not spending working with an agent is time that you're working free for yourself, to be quite honest with you. Most agents, almost all agents that I know of, get paid at the end of the sale with their buyer. While your agent's fee is negotiable, usually it is a commission based on the sale and purchase price of the home. So if you're going to purchase $1 million home and you only work with your agent for 2 weeks versus working with your agent for 2 months, you might as well get the longevity and benefit of working with an agent for 2 months who can really help you figure out what you need. So it's better to start working with your agent early on, because if you don't work with an agent what you're doing and you feel really overwhelmed, and then you start working with an agent, you are going to notice night and day the difference in your home search process and being able to focus on the things that matter and save a lot of time and energy and stress by doing so. Number 3, I think it's a really important and fun activity to, as you're looking at homes, really make a list. I think especially if you're buying with somebody else, a couple or another family member or a few family members, I think it's important for everybody to make their list of non-negotiable needs and then their list of your dream home list versus your necessities list. So first rules of real estate, location, 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 right? So it's really important to focus in on where you want to live. Now, let's just say, for example, you're like, oh, I want to live in Berkeley, or I want to live in Alameda, or I want to live in San Rafael. If that's as specific as you need to go, great. But maybe you're more specific. You're like, hey, I really want to be in the Proctor School District in Castro Valley, or I really want to be on the west end of Alameda, or I really want to be in this one neighborhood in San Francisco. That is also important because location is usually the number one driving factor in a home search. Now, it's important to have your location honed in. So maybe you can say, hey, I want Castro Valley. So maybe you might say something like, I really need to live in Castro Valley. I would like to live in the Proctor School District. Maybe that's a negotiable for you versus some people it might be, nope, have to live in Proctor, not moving anywhere else. And I get that a lot. Another example, sometimes I get people who say, I really need a 3-bedroom, 2-bathroom house. And I say, well, do you really need full 2 bathrooms, or would you be okay with 1.5? And sometimes they're like, okay, 1.5's okay. Or they say, no, I really need the full 2, or maybe I'm okay with 1.5 as long as there's room to make it a full 2. And I go, great. We're going to keep our options a little bit more open. And one of the reasons I'm going to say is because there are a lot of deals to be made where other people are unwilling to compromise. So somebody else's non-negotiable might be your negotiable, and that might be a great way to get a deal for you. So that being said, it's the Bay Area. I don't care if your budget is $300,000 or $3 million. Every one of my clients is unfortunately going to have to make a compromise somewhere, whether it's the location, whether it's the price, whether it's the condition, whether it's having that extra bathroom. Something has got to give somewhere, because almost nobody gets everything on their list. No house is picture perfect for you that's in your budget, in the right location, and has everything already done the exact way that you would want it. It's almost impossible. So just go into that mindset, be realistic, but also optimistic that yes, you're going to find the amazing dream house for you, but know that it's going to need a little bit of tweaking to make it perfect for you. So keep your few non-negotiables. I would say keep it to 2 or 3 at most if you really can. Then keep your flex list a little bit longer, maybe 3 to 5 things would love to have, but aren't deal breakers. I think that's really going to help hone in on what you want, especially if you're comparing your list to a partner or somebody else you're buying with. It's good to be on the same page early on so that you're both not focusing on different things and you can be focused together as a team. Number 4, it is doing the buyer's due diligence. That means you are going to get all the information you can about the property and review it with your agent and ask questions. So the nice thing about the Bay Area, most sellers and the seller's agents do a lot of the disclosures up front. In some parts of California, especially outside of the Bay Area, the market moves a little bit slower. A lot of the times the sellers won't even have disclosures ready for you. They may not have filled them out. And a lot of places, they don't do inspections ahead of time. One of the nice things about the Bay is a good majority of the properties sellers will already do inspections. So they'll have a home inspection for you, possibly a roof inspection, and possibly a pest inspection where they're looking for things like termites and dry rot and water damage, things like that. These inspections give you a comprehensive understanding of the property. When you're looking at the home inspection, they're going to tell you what the plumbing, the electrical, they're going to look at the foundation, they're going to check all the components of the house, probably go up on the roof, tell you how old the furnace is and the water heater. Those kind of things are really important when determining the cost of repairs and maintenance of the home in the foreseeable future. Of course, we can't predict everything, but it's really important to understand the full picture because you may fall in love with the house and then realize it has $50,000 or $100,000 worth of work that's going to need to be done in the next year or two, and then say, well, wait a minute, I'm not willing to pay that price anymore. I'm going to adjust my expectations based on the findings that the sellers provided. That's what's so important with these disclosures. Plus, in the disclosures, the seller is going to tell you everything that they know about the home, and they should be telling you everything they've done to the home, any repairs, modifications, permits, or not permitted. And that also will play into the attractiveness and desirability of the home and how much you're willing to pay for it. Doing your due diligence here is super important in making sure that the property is the right one for you. By doing this, that is going to determine what you are comfortable making for an offer and how attractive that can be to the home seller. It's going to help you greatly in the negotiation process, and it's really going to help you feel confident in the offer you're putting forward. One thing to note during the due diligence process that comes up a lot lately is insurance. California insurance has become a lot more difficult to obtain and a lot more expensive. So one of the questions you may want to ask is around insurability and get an insurance quote. This is a great thing that I'm telling a lot of my buyers to start doing early on when you're looking into a home that you love. For example, if you find out that in that home inspection that property still has knob and tube wiring, guess what? You're probably not going to be able to get a regular insurance policy for that home up front. You're going to have to go through a specialty insurance carrier and highly likely use what's called the California Fair Plan to obtain an insurance policy in order to close the sale. If you're getting a loan, you are going to be required to have insurance. So while you're buying a home that has knob and tube, you can't change that up front. You have to have that insurance to close the sale. Now, once you get the keys, you can remove the knob and tube, put in new electrical and a new panel, call it a day, and turn around and get great new insurance. It's just a band-aid sometimes to just get you into the property so that you can do what you need to do. But by doing that homework up front, it really alleviates a lot of surprises once you get into escrow. Because if you haven't done your due diligence and homework up front, it can feel a lot more stressful during the home buying process once you're in escrow. And now, how do you get into escrow and what is escrow? Well, we're talking about writing an offer. So you want to write an offer for a home that you've done your due diligence for, you've asked your questions, you've read the disclosures. You're going to determine if they've provided enough information to you and if you have any more questions. Now, if you need to get further inspections or you want to continue to ask questions while you're in escrow that maybe you can't get answered ahead of time, you're going to need certain contingencies or conditions to do that. If you don't feel you need it, you've gotten everything satisfied and you're confident with the information that you've been given, you might not need that contingency. These are really important things because generally speaking, sellers want to see things with less contingencies, whereas buyers want to see things with more contingencies. More contingencies for a buyer means more protections for a buyer, but contingencies a seller sees, it means it's more ways that the buyer can back out of the deal and it's a less sure deal for them. So so sellers don't like to see them. So it's important to find that. You also need to tackle the other two contingencies, which would be your loan and your appraisal. If you're obtaining a loan, you want to make sure that you protect yourself. If you can't purchase that property in cash and you need to get a loan, then you may need a loan contingency. But if you've done your homework and you've met with a lender up front and you are pre-approved and your lender has done underwriting in advance, you might potentially be able to write an offer without a loan contingency. That means that the lender has said that you are good to go. They don't have any issues with your lendability, and they feel confident that you are going to be able to get a loan without a problem. That might be a situation where you can make your offer more attractive by not having a loan contingency in that offer. You can say, yes, I'm obtaining a loan, but I don't need a contingency because I'm good to go. I did my homework up front. I'm prepared, and your seller is not going to have any problem accepting my offer because I guarantee I'm going to close this sale. The last contingency that is usually on the table is the appraisal contingency. Now, if you're obtaining a loan, you need an appraisal. The lender is going to require that you have one. What does an appraisal do? An appraisal is the value of the property. So let's use round numbers again. Let's say you're in contract on a property for $1 million, and the lender is going to say, well, we're going to lend you 80% of that. Say you're putting 20% down. So we will give you a loan of $800,000 based on the purchase price of $1 million. They're going to send out an appraiser who's going to come take a look at the property, take a lot of photos, make notes, and then send over their valuation of how much the property's worth. So if the property comes back at $1 million or more, you're good. There's no problems. The lender's going to loan on it. You're going to get the loan based on that amount, and everyone's happy. But if for some reason they send out the appraiser and the appraiser feels it's only worth $980,000 or $950,000, for example, now we have a slight variance in the price. The lender is not going to approve the loan of $800,000 on $1 million purchase. They are going to say, well, I can lend you 80% of $980,000, for example, or 80% of $950,000. You could potentially also still get the loan for $800,000, but now that means you're technically putting less than 20% down. So if the appraisal comes back at less than the purchase price, you have to talk with the lender and switch the numbers up just a little bit to make it work. So if you're not sure if the property is going to appraise for the full price that you're in at, good to keep that appraisal contingency in there. But if you need to be competitive and you're willing to roll the dice, or you think you're getting a really good deal and you're sure it's going to come back at the contracted price or higher, then maybe you don't need to have it in there. All of these things are going to factor into the attractiveness on which timelines, how quick you can move on the sale. So how quickly you can remove the contingencies and how quickly you can close the sale are really going to factor into how much the seller wants to accept your offer. It's not just about price. Terms are equally as important. Once you get that offer accepted, you are in escrow, and that, my friend, would be a totally different episode. So stay tuned. I will make an episode about the escrow process. I hope these 5 things in the home search process were really helpful. Thank you so much for joining me. If you like this video, please comment below, shoot me a message. I would love to hear from you. I appreciate feedback. And if you are looking to move in the Bay Area, whether it's buying or selling, I would love to meet with you. My contact information is below. You can shoot me a text, give me a call, or send me an email. I have a QR code in my banner if you want to book a meeting with me. I'm Andrea West. I'm a Bay Area native, and I've been a realtor since 2010. I know Bay Area real estate from both sides of the bridge, and when we work together, your goals are my business. Till next time.